What is up, guys? So today I'm here with Molly. Say hi, Molly.
Hi.
So this is Molly. She is here from India. And Molly, how long have you been in Canada for?
1.5 months.
1.5 months. So Molly is fresh off the boat, and today I'm going to be teaching her how to trade Forex, how to trade the no-nonsense Forex way. Every single way that I am trading, I'm going to be teaching her and showing you guys. So if you're beginners or you don't know how to trade the no-nonsense Forex way, or you're new to Forex trading in general, stick around. Now, Molly, we have our chart open here. What does this stand for here? EURUSD.
Euro USD.
Yes, Euro USD. So we're comparing the Euro versus the USD. What does daily mean?
On a daily basis?
Daily basis, yes. So basically, one day is going to be represented by a candle. So every candle you see here is representing one day of price movement. So I know you've started baby pips.
Yeah.
How far along are you on that?
Not very far.
Not very far. So I think you're still on preschool?
Yeah.
Preschool. Okay, sounds good. So what do you see when you look at this chart?
I have no clue what is going on.
Okay, you don't have any clue what's going on. Great start. Okay, and what do you see here down below the chart? All these sort of crosses and these lines. Do you know what these are?
Maybe crossovers or something? I don't
So
know.
yeah, these are crossovers. These are actually indicators.
Yeah.
Okay, so basically we use indicators to see where we place trades. So by the end of this video, I'm going to show you how to use these indicators to actually place a trade.
Alright.
Okay, sounds good. So the first thing we look at when we place a trade is we look at price. So what is price doing right now? So the price, we look all the way to the end. If we click this arrow here, this is what price is doing right now. Okay, so can you tell if Euro USD is in an uptrend or a downtrend?
I think it's going down.
It's a downtrend. Okay, do you know why it's a downtrend?
Because the wave is going down?
The wave is going down, yes, and you can also tell because we have a moving average here. This small orange line here, this thin line, that's called a moving average. If price is below the moving average, it's looking at a downtrend. If it crosses up and price goes up above the moving average like it does over here, we're considered to be in an uptrend here. Okay, so right now we're in a downtrend and price keeps going down here. So because it's going below, it's a downtrend.
But if it starts going up,
Yeah, it's an uptrend. So right here, downtrend.
then it
Right
went
here,
uptrend.
uptrend here. So this could be the potential of a reversal here. But notice how we didn't have any signal from our vortex indicator. This is our confirmation indicator. So this is the indicator that we look at to see whether or not we place a trade. So when the blue line crosses over the red line, that's a sign that we might be in an uptrend and we would place a trade, right? So we would have to look at the moving average and say, okay, price is above the moving average. That's good. So now we're looking right here at this candle. Price is above the moving average. The confirmation 1 indicator confirms that. And now we're looking at the C2 indicator, which is the coral indicator. The coral indicator is a thick line right here, the red, yellow, blue. Now, if it shows blue, would you guess that that's going to be a signal to go long or a price is going to go up? Or do you think blue would represent short or price is going to go down?
I think it's for long.
Yes,
Because
correct.
It's going long.
Yes, so a blue line here for coral indicator means that it wants to go long. So all of these things have to match before you can place a trade. So we have our confirmation 1 indicator that has to cross, the blue line has to go over the red line. We have to have the coral indicator, which has to be the color blue. If it's red, that means it's showing it's going down. Yellow means it's kind of in between. And blue means it's going to go long. It has to be above the moving average, which represents it's going to be an uptrend. And it also has to confirm with this volume indicator here.
Alright.
the volume indicator is in place to keep us out of ranging markets. So ranging markets is basically what we see here when price is simply just going sideways. So this is what we call a ranging market. When price is just going up, down, up, down, up, down, it's not really doing a whole lot. This is what's called a ranging market.
But you wouldn't get any profit in this market.
Exactly, right? So you wouldn't really make profit. So what ends up happening is if you place let's say you place a long position up here, right? Or where are we crossing here? Yeah, right up here. You place it up here, price just goes down the other way, right? And so it's gonna either hit your stop loss or you're gonna be in a drawdown there, right? So it really doesn't do a whole lot of good for you. And and you can actually see it a little bit better if you were to go in here. So let's say you went short here, right? Downtrend, you went short here. Should we went short, boom, price goes the other way, right? You would hit your stop loss here. You'd place a stop loss somewhere around here, and price would hit your stop loss. You'd exit that position in a loss.
Quick question: What is a stop loss?
What is a stop loss? Okay, so a stop loss is basically a position that you would open that would prevent you from losing any more money. So if I was to place a trade, this is a demo account, by the way. So for the purpose of this, I can place a trade here, even though it's off hours. So let's actually place a trade here. So if I had the Euro USD, so now these are all of the different pairs here. So if we wanted to find Euro USD, it's up here. So you can put whatever volume you want to. Okay, right now I'm not going to put stop loss and take profit, but let's say we're in a downtrend. So I wanted to sell. And we're opening up 0.07, which means 7 micro lots. If it was 0.7, it would be 7 mini lots. And if it was 7.00, it would be 7 lots or 7 standard lots. So we're going to sell.
Why are you selling?
Just because we're in a downtrend. I'm showing what a stop loss looks like.
So if you're in a downtrend, you would sell?
You would sell, yes. So you always go with the trend. As no-nonsense Forex traders, we are trend traders. So you go with the trend. We're not reversal traders, which would go against the trend. Okay, so now we have this. And so we could see here, this is a trade that we placed. So we're going to sell. And let's say right here, this is where we set our stop loss to. So if price goes up and hits our stop loss, we would exit the position automatically, right? And we wouldn't lose any more money. So this is to protect our account in case price goes the other way. Does that make sense?
No, but if it goes up,
yes.
Aren't you taking profit?
No, because we're selling, we're going short. And because we're going short, we think that price is going to go down. And in this case, we are going to be, right, looking to take profit as price decreases. Okay. So now we can kind of adjust this here. And then I can also put a take profit level on top as well. Right there. My news indicator is kind of blocking it, but this is basically what it would look like, right? So a stop loss would be up here, take profit level would be here. So if price hits take profit level, our trade would exit in profit. If price hits the stop loss level, right, we would exit the trade in a loss.
But like if you're going down, aren't you like getting into a loss position?
So if the price goes down, if you opened a long position, that would mean that you would get into a loss. But because you're entering a short position, meaning you think price is going to go down, that means if price does go down, that means you're going to be enter a profit. So a long position, you would enter a long position if you think price is going to go up, which you would only do in uptrends. And if you are in a downtrend, you think price is going to go down, you would enter a short position. There we go. Thank you. All right. So Now, I wasn't gonna go over this until later on, but since we already have a trade open, I'll actually show you how I place my trades if this was a real account, right? So if I was on a real account, I would actually place two trades. I would place one that has a take profit level, and I would place another one that doesn't have a take profit level. Okay. Now, why do you think I would and both of the trades have a stop loss? Why do you think I would have two trades placed, one with a take profit level and one without?
So that's to check your profitability?
Yes, partially yes. So if I open one trade with a take profit, right, let's say price continues to go down, it hits my take profit level. If I exited the trade, I would not be able to profit anymore. That's it. It's over. But because I open a second trade without a take profit level, that means that I'm not going to be exiting the trade once my initial take profit level gets hit. That means that even if price keeps going down, I'm still going to be making more and more and more profit. And we use what's called a trailing stop to protect those profits. So we would open a second trade with the stop loss. Let's say price hits the take profit level. I would then move, so one trade is exited, right? For the second trade, I would move this stop loss down to break even point, right about there. And the reason being now is if price reverses and hits my stop loss, I'll still exit that trade in profit because my first trade was a profitable trade.
But you wouldn't earn anything on the second one.
I wouldn't earn anything on the second one, but I also wouldn't lose anything on the second one. But the reason what the second one does is it allows me to get those really big trends. So I would either exit at this point as a small win or a big win depending on where price goes. If price keeps going down, 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 I would simply adjust my stop loss accordingly and I would just have it trailing. I would have a trailing stop loss. Does that make sense?
Yeah.
Okay.
But isn't it like gonna be inevitable for it to go down, down, down?
Exactly. So it's gonna inevitably come back up, which is why we have the stop loss there. So the thing is, if you put the stop loss too close, then it's gonna like hit it, and you're not gonna be able to catch those big trends because any type of price movement up is gonna take you out of the trade. If you put the stop loss too wide, then if it reverses, you're going to be profiting less. You're going to be capturing less profit because price is going to reverse, and it's going to eventually hit your stop loss. So you're going to have a balance between wide and tight, right? And kind of have it just right so that you can actually get it to capture long runs while still being able to maintain your profit. Okay, so I'm going to close this position out right now, which I can do even if price doesn't hit my take profit or my stop loss. So right here, this is what it's looking at right now. So we sell USD, Euro USD at this price. This is our stop loss take profit level. All I'm going to do is close this order, and that's it. Right, and the little negative that you saw there was basically just the commission that I had paid in order to do this, but because this is a demo account, it doesn't really matter. Okay, so now you know how to open a trade and close a trade. Now we're actually going to look and see if we would close or open a trade based off of these indicators. So we went over the confirmation 1 indicator, right, which shows us, and by the way, these are just, all these indicators are just here based off some type of math code, usually based off of moving averages, volumes, or any type of math or coding. Okay, so we have the C1, which is our vortex. This is the initiation, right? Once we get the initiation, we look to the C2 to make sure that it confirms it. We also have to make sure it's in an uptrend. If it's in a downtrend, which means that price is below the moving average, we wouldn't place the trade. Right? We also have to look at the volume indicator. So the volume indicator makes sure that we're out of ranging markets. And so when you see this red line here, it means that...
Great.
Was that your new boyfriend?
Yeah.
Yeah, all right. Okay, so when price is going to be on this red line here for this volume indicator, it's telling us not to trade. It's saying that there's not enough volume in this market to trade here, and it uses calculations to calculate that. But basically, when this gray line is above the green line, this red line will appear here, and that red line means do not trade. That's our Damiani volume indicator.
But does it keep on showing on a daily basis? Because you are seeing past dates, no?
So this is updating regularly. So right here, you can see that it's still red. And this means that we don't want to place a trade right now because it's showing that we're likely in a ranging market. Once the green line crosses over, then it'll say, okay, we're in a trending market now.
So we have to look at 3 different...
So there's the moving average.
Yeah.
There's the confirmation 1 indicator, which is this 2-line cross. There's the coral indicator, which is the confirmation 2 indicator, which is this chart indicator here. So this is the chart here, and this is the indicator on the chart, similar to a moving average, but it's not a moving average. We also have to look at the volume indicator, so that's 4. This right here is called an exit indicator. So this is once we actually place a trade, if price hits cross this line, we exit. So this can prevent our stop loss from getting hit, so we can exit the trade before stop loss gets hit, so it can save money. This is also good for take profits as well, because we can exit the trade when we're in profit, and we may be able to protect more of our profits before price reverses and hits our stop loss. Does that make sense? Okay.
So we have to look at the intersection for this second one?
Exactly, right? So basically, let's say if we opened up a short position here, right? Boom, boom, boom. Let's say price doesn't hit our take profit level. We would simply exit right here. So
why after the intersection?
Because the intersection gives us the signal, and we wouldn't have seen the intersection on this candle. We would have only seen the cross at this candle here, and we trade at the end of the daily chart at 1:40 Pacific time, which is right at the end of the chart. So we would have ended right about here. So we would have captured a small amount of profit. So if you actually look here, you can see, so the first number, that's the number of candles. So that's 14 candles that have passed from there. The 990 is the amount of pips, but you have to divide it by 10. So it's actually, you would have captured 99 pips. So some people trade with pips, but as no-nonsense Forex traders, we don't really look at pips. We simply look at the ATR, which is another indicator that I'll show you about. But the ATR is what we look at for setting our stop loss and take profit levels. And then 0.99792 is simply what price it's at, and that's just going to be over here.
What is pips?
Pips is basically if price moves up, it moves up 1 pip. Down, it moves up down pip, or 1 pip.
Change,
yeah, basically it's the percentage change. So let's say you captured 100 pips. On different charts that'll look like different things, but yeah, you can measure it as pips and say, okay, I've captured this many pips. Based off my position side, that'll give me X amount of profits. Okay? So we've gone over pretty much every indicator here. Now, these 2 blue lines here, these are what are called ATR bands. So ATR is called average true range, and it basically shows you how much a pair has moved over the last 14 days. The more the pair has moved over the last 14 days, the wider these 2 lines are going to be. So if a pair hasn't moved very much at all over the last 14 days, these lines are going to be very skinny, just like they are right now. However, let's take a look as an example here. Now you see here how wide this is. It's because you see this big movement here. That's the reason why these are so wide, because the pair has moved so much. They're so wide here. Versus, look at this. This is a ranging market here. Not a whole lot is happening, and as a result, these blue lines are very, very skinny. So that's how we determine where our stop loss and take profit levels are going to be set. The wider these ATR bands are, that means the wider our stop loss is going to be, the wider our take profit level is going to be. Because the pair has moved a lot over the last 14 days, we're going to be setting our stop loss wider and our take profits levels wider.
Yeah.
Now, if the pair hasn't moved very much over the last 14 days, we're going to see, okay, these aren't really wide, and we're going to have a tighter stop loss and a tighter take profit level. And this is going to help us manage our risk. It's all about, the ATR is all about risk management. It's not about getting into a great trade. It's simply about how you manage your risk, how you manage your stop loss, how you manage your take profit levels.
Not much profit, not much loss.
Yes, if the pair hasn't moved very much, you keep your stop loss and take profit levels relatively tight. And when I say tight, I mean close to price. Okay? So let's take a look and see where we would have been placing trades, if any. So I'm actually going to let you take the lead here, and you can sit in the big comfy chair.
No.
Yes.
No.
Yes.
No.
Yes.
I have no idea what to do.
No, we've talked about this. All right. Oh.
I don't know.
Oh my god, I haven't sat on this chair so long. Okay.
So, what are we gonna do now?
Okay, what are we gonna do?
No idea.
So, basically, which indicator is the one we look for when we're looking to initiate a trade?
These candles?
Yes, but what's the actual indicator that would initiate the trade? The confirmation one indicator.
This one?
Yes, what's it called?
Vortex indicator.
Vortex indicator. Great. Okay, so now let's take a look here. Let's go back a certain amount of ways. Let's go back to, and you can see all the dates down here, right? So let's go back to the beginning of 2022, right here. Okay, great. So right here, where is the first time that the vortex indicator would tell you to trade, to initiate the trade?
This one?
Okay, that's going a little bit further back. So let's start with from January 2022.
Alright.
Yeah, so right here, right?
Right here.
Okay, good. So notice how price goes down. So red line comes over the blue line. So that would be is that a long or short signal?
Short.
Yes. And now the candle right after, price goes like this. Is this a long or a short signal?
This is a long one.
Exactly. So the first signal is short, second signal is long. So the reason why we have other indicators is to kind of avoid things like this. We don't want to have all these mixed signals coming in here. We want to kind of filter those out. So that's why we use all these different indicators on the chart. So now if we were to place a short trade here, right, are we in a downtrend? So if you hit Control F, try again. Yeah, there you go. Okay, so now you can kind of see exactly which candle it's on. So you would go right here, Control F. So you would look at the candle right after. And so this wouldn't have been a short signal because you wouldn't have gotten this signal here from this candle. So this would have been above the moving average here. So this would have been a long signal here. But what's stopping you from entering that trade?
This third one.
Yes, so the volume indicator, what else? What's preventing you from going long in this situation?
This.
Yes, because it's not blue,
Yeah.
right? The coral indicator is not blue, so we're not going to place a trade. So keep going and see if you can find a trade. Okay, so this would be another way, right?
How did we go forward?
No, you can see the next one is right here,
Yeah.
right around the 20th of January. So is that a long or short signal?
That's a short one.
Yep, because the red is crossing over the blue.
Yeah.
Okay, so now look at the moving average here.
But
Right.
it's red.
Yeah, so
We don't enter. Do we?
we would enter because we're looking to go short. We would look to enter here because red means short.
Alright. Blue means long.
Blue means long,
And
red means short. Okay, So price is within the bands here. So that's what we want to look for. If price is outside of these ATR bands, we wouldn't enter. And the reason being is because price, we don't want to enter right after a spike, whether that's down or whether that's up. Because if we enter at a spike, what's very likely is price is going to reverse back, right? And we don't want that.
But isn't the candle going out of those two lines?
No, so now we have to look back and see where it is. So we're looking at this candle right here, right? It's the candle after the cross. So we're looking right there on January 21st. So the price is between the moving average and the ATR band. So this would be looking for a short signal. What would you place a trade here or not?
If I have no knowledge about it, I wouldn't.
No, we're not. We're building the knowledge here, though. Okay, so would you think about, look at all the indicators here: your C1, your C2, your moving average, your ATR bands, your volume indicator. What's keeping you from opening this trade, if any indicator?
This one, because
Yeah.
it's going down.
Exactly, right?
Yeah.
So the volume indicator, look at how it filters this, right? Basically, this whole ranging market here where price is just going up and down, up and down, up and down, is being filtered by a volume indicator.
Yeah.
So that's what we want a volume indicator to do. Okay, so we can say, okay, this wouldn't be a trade. Let's move on to the next one. So what's your next one going to be looking like?
This?
Yes.
Or
So
maybe this? Because this is telling us to enter, no?
no, but look at the initiation. The initiation is always a C1.
Alright.
Okay, so the C1 is the initiation, and then you look at your other indicators. So which candle would you look at here? Would you look at that green candle, or would you look at that red candle in the next one?
The red one.
Well, yeah, you would look at the red one. Now, what would be stopping you from entering this trade as a long position because it's a blue one?
Because it's going out of those lines.
Yes, because price is going out of the ATR bands, and it's a good thing we didn't go long here because the next candle after price just keeps going down, 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 down. So it's a good thing we don't have it, and it's a good thing that we have a system in place that tells us when to trade and when not to trade. Okay, so now if you want to move the chart over, you can simply just left click. Just click with the mouse. Yeah, and then just now just drag it over. So just hold the left click and then just move it over. Yeah, there you go. So now you can look for the next one.
I won't enter here.
Yeah, so first you have to look at the cursor. So Control F. Yes, okay.
So I won't enter here, but I think I can enter here.
Okay, so why would you
But-
not enter in this one there?
Because the blue line is going onto.
No, so again, right, this is the initiation. So when one line crosses the other, that's initiating the trade. When the blue line is going under, it's initiating a short trade. It's giving you a short signal.
Alright.
So which candle are we looking at here?
This.
Yes, and okay, now where is it ending? Where is this candle ending?
Right here.
No, so that price is where the price has gone to that day, but the ending is actually right there, right?
Alright.
Right at the bottom of that candle, not the wick. So what's preventing you from entering this trade?
Because it's outside the area line.
It's outside the ATR bands, which is why you wouldn't place the trade. If it was within the ATR bands, you would have gotten the confirmation from the C2 because that's red.
Yeah.
It would have been below the moving average, so it's in a downtrend, and also the volume indicator would be telling you to go as well.
Yeah.
Okay.
But if it would have been inside, then we would have placed trade.
If it was between the moving average and the ATR band, we would have placed a trade.
Alright.
So keep going.
So what about this one?
Okay, so now let's take a look here.
No.
So look at the next candle after the cross. Yeah, right there.
This one.
So what's preventing you from entering this trade as a
Because
long?
it's yellow.
It's yellow, and what about the moving
plus
average?
This is below.
Yes.
The green line is below the purple one.
Yes.
Alright, so
So you can keep going here.
we can enter.
So I think you missed one right there.
Yeah.
right? So the blue line crosses down, so that would be looking to be a short position.
Mm-hmm.
Now you look at one candle over.
Yeah.
Yeah.
But we won't be entering because it's outside.
Outside, exactly.
Yeah.
Okay, so you can go to the next one.
Plus the volume indicator is telling us not to enter as well.
Exactly.
Yeah. So what about this one? We will look at this candle.
No, you can look at the green one.
The green one.
Yeah, because that's the first candle after the lines cross.
Alright.
Okay.
So this one plus, but after few days or something.
After the next day.
Yeah, it's telling us not to go.
So this would actually be a trade here because we have the indicator here telling us yes. The line just turns blue here, so that would be a signal, assuming at this time the line was still blue.
Mm-hmm.
So this would be a trade. The next day wouldn't have been a trade, and the reason being is because this volume indicator would have kept us out. So if you want to see how many pips you would have captured, you can take the end, right? So you would take the closing of this day, and you would see, now where would we exit this position, assuming price doesn't hit our take profit level? Where will we actually exit this position? Where's our exit indicator?
Here?
No, the exit indicator is the Rex oscillator. Right there. Yes, so right after we would have exited here. So you can take, if you want to, you can drag this and drag it all the way over. So Control F. Okay, now hold it on the close of that candle, of that green candle. So close of the candle. Yeah, right there. So yeah, hold it down and now drag the cursor until you get to this red candle. Where are we looking here? The red candle would be this one here. So that would have been approximately 135 pips that you would have captured in profit. So depending on what the size of the position would be, you would have made X amount of money from there.
Right.
Okay, so that would be an example of a trade. Now, what is this here, this news indicator there? What does that represent?
Maybe some political news or something?
Yes, so this is political news. So now if you were to look at a Forex news calendar, they would be ranked as low, medium, or high impact. We only look at high impact news events, and we avoid high impact news events because that can affect our trading, right? If we're in a trade and the high impact news events come out, then that trade may go south simply because of the news event, and we don't want external factors affecting our trading. So we still trade through low and medium impact news events simply because they won't make really that much of a difference in our trading, but we avoid high impact news events. So if we're in a trade and there's a high impact news event coming up for that pair, either for the euro or the USD in this case, we'd simply exit that position. If there's let's say a news event coming in a day from now or 2 days from now, we wouldn't place any trades on that pair.
Alright.
Okay? Sounds good. So, lots of information.
Yeah, a lot.
Yeah? What do you think about this?
This is cool, but it's gonna take a lot of time to learn.
Yes.
But if you're gonna learn it on a daily basis, I think I can do it.
On a daily basis, yes. So, the things that'll help you out are Baby Pips, School of Pipsology, right, which we're going through, and also checking out the No Nonsense Forex channel on YouTube, which he explains why we trade this certain way. And yeah, that is it.
Sounds good.
How does it feel?
My Forex IQ has gone up.
Your Forex IQ has gone up?
Yeah, I
but
think
your
so.
brain cells are kind of taking a break now, a little bit. All right,
Yeah, they want a break.
Okay, well, that is going to be the end of this video. I hope you guys enjoyed. Leave a like if you did and you want to see Molly again. And as always, have a great day. Peace.